It's great to see you. And let's just start with some of these price targets because it helps to put a round number on things when we're talking about the end of this year. And for you, even the end of next year, you still see a lot of upside ahead.
We do, Kelly. We think, we're moving from strong to stronger here in the U.S. with the Trump agenda coming in, providing another leg of growth. So we've set a target for next year of 7,000 on the S&P and 7,500 by the end of 26. We just see pretty much a pretty strong growth rate going forward, lower inflation, lower interest rates, reinverting yield curve, deregulation, helping profits, lower taxes. It's a pro-growth agenda that we're dealing with here.
Do you worry about the soaring U.S. dollar? When I saw 108 on the dollar index this morning, that really caught my attention.
Well, it's good for U.S. companies in the sense that, it gives them more pricing power and it maybe offset a little bit of the tariff increases that are coming. It's one of those offsets you get that people don't think through when they just kind of multiply a tariff increase by volume. But the stronger dollar helps offset that. Good for U.S. consumers. So net, no. I mean, generally a strong U.S. dollar is good for U.S. stocks, Kelly.
I forget the term we were just using with Steve and Jay Bryson. They said, the business community might, be calmed down if Trump were able to present a list of, what he's actually trying to achieve with, tariffs that would do X but not Y. Or, you know what I'm saying? I'm not sure if you feel the same way, because from where you sit, it sounds like you see them as much less of a threat than others might.
Yeah, I'm smiling, Kelly. I saw you smiling during that interview because I think you were thinking the same thing I'm thinking, that, chess players don't, send out a list of their next three moves. And a lot of the folks that have been upset about tariffs, upset about the tax cuts and their impact on deficits are kind of playing checkers, in my view. I mean, a couple of moves down the line, lower taxes generally will lead to a bigger tax base and higher revenues. That's what happened the last time. Revenues came in a lot higher than the CBOE projected when Trump cut taxes. Same way with tariffs. The threat of tariffs, first of all, a lot of the increase from tariff prices go through the companies, absorb them rather than pass them off to U.S. customers. It improves U.S. investment, which is good for growth. And there's other offsets going on within the broader agenda that you've got to kind of also consider that are disinflationary. All the deregulation, all of the government efficiencies, increased availability of government workers to help a labor short economy, deregulation, lowering costs for U.S. companies, lower taxes, improving earnings, and lowering costs for a lot of goods going to the consumer. So it's not a simple tariffs up, prices up, in my mind.
No, I think you've made that clear by kind of through that illustration. So you've got 7,500 as a round number on the S&P for the end of next year, 7,000. Is that right for the end of? No.
Yeah, well,
7,500 for 2026.
Yeah, we look at it, Kelly. So we have 7,000 for the end of next year and 7,500 for sometime in 26. But frankly, the market often gets to our targets ahead of us. And, that's not that surprising. We're not that far ahead of everybody else in our thinking. So we'll see. I mean, this year we're at 6,000 right now or close to it. That was our target for the end of next year when we started the year out. So,
wow.
The market sort of caught up to us.
You're not worried that, and again, maybe we simply by drawing the contrast to Europe, we can explain why U.S. stocks seem to be doing so well. But there have been a little bit of frothy signs the last couple of weeks. When we've seen massive inflows into equities. Some of the meme stock names were jumping 20%, as soon as the election happened. Obviously, crypto's been on a tear. So since you've been through these cycles for so long, Steve, is there anything in this behavior that says to you the market's getting a little ahead of itself?
Well, any bull market, you're going to see some froth, Kelly. And look, we've got a little cash on the sidelines. If there's a pullback, we'd love to see one, especially if the bond market overreacts at some point and goes to 5. We'll probably put some more money to work in equities if that happens. But, on the other hand, Kelly, I look at a lot of the names we own in our portfolios, particularly in the small cap space and in the value side of the portfolios. There's an awful lot of stocks I want to buy here. Not everything is trading at 35, 40 times earnings. So there's a lot of room to run here. I remember I was on with you back in early July, and we had made the call of a broadening out trade. And you just look at how much the market has moved since. The S&P's I think the Mag 7 are up roughly 3% from that point. But the Russell 2000 is up 17%, I think, as of today.
That's true.
But there's still a lot of very attractive stocks in the small cap space and in those value indices. So we think it's a pretty healthy market. Sure, there's some froth. I'm not a Bitcoin guy, but that looks a little frothy to me. But, generally, we think the market broadly looks pretty attractive.